Welcome to the Reboot Chronicles, connecting you to the world's top leaders and CEOs rebooting their organizations and themselves with revealing stories to help you prosper in unprecedented times. I'm your host, Dean DeBias, and as a serial CEO who's led dozens of companies that created thousands of jobs and billions in revenue, my passion is uncovering powerful lessons that can inspire you to reboot your organization, your career, and your life. Listen and subscribe wherever you get podcasts or at rebootchronicles.com. I'd like to welcome Rich Eknoian to the Reboot Chronicles. Rich is the CEO of World Insurance Associates, one of the fastest growing insurance companies across categories like personal and business insurance, benefits, and HR, as well as financial services. Talk about that. Since Goldman Sachs invested $1 billion or so into this growth platform, World has been on an acquisition tear, amazingly so, acquiring hundreds of companies. And they now serve about 300,000 clients, about 250 carriers, 2,800 professionals in over 300 locations. At $2 billion in premiums and counting, it looks like this will be another record-breaking year for World's acquisitions and revenue growth. Rich, good to see you.
Good to see you.
I am so impressed of the absolute growth tear you guys have been on. Those of you not on the video feed, I'm pointing up and to the right, and we love companies that are up and to the right, especially ones that have mastered the art of acquisitions. And I mean, I thought I was really good at M&A. You guys are a machine, but you know, I work with a lot of private equity people. There are so many business sectors now that are doing acquisitions and roll-ups with the goal of being the top consolidator or platform provider, you know, from healthcare to professional and home services. So we're wondering why did you choose insurance? You could have done anything, really.
Yeah, well, I think that like most folks in the insurance business, I won't say all, but it was not a direct path for me professionally. I was a CPA by background. First 8 years out of college, working in the public accounting world. Got an appetite for M&A in general. As part of that, as I moved from my CPA role to CFO of a group of companies, not in the insurance business yet, but getting a taste of M&A in general, I found myself intrigued by small or advisors that advise closely held companies that maybe wanted to sell. And I thought that was an underserved market I'd like to get into. So I went back for my MBA at NYU Stern in order to position myself to be an M&A advisor. And while I was there is when I got involved with the insurance distribution space. Someone in my study group asked me what I was going for my MBA for, or why I was bothering to get my MBA at that point in my career. And I explained it just like that. And he said he thought that he knew somebody that could use my services. So I started working with a person doing M&A advisory, and that was my introduction to the insurance space. So for 8 years, I worked on mergers and acquisitions, exclusively in the insurance distribution space, and that was my entree into this business. So it was, that was a taster on how deals were done in this space, how fragmented this space was, and how ripe for consolidation. This was around 2000, and that maintains today. Still 35,000 plus brokers, out there, and ripe for consolidation because they're all different sizes. And the same holds true. We'll get to it in the wealth management space, where we now also consolidate businesses on that advisory side. So crooked road into the insurance space, but my appetite stems from watching others successfully acquire businesses in this industry.
I like it. For some of us who haven't had real, assigned mentors, the observational mentorship is always good too. Sounds like you started out in the distribution side too, like me back at FedEx, and that's always a good training ground. And what's it like out there? I mean, a target audience of 35,000 acquisition targets to me that's a fun playground, all shapes and sizes, of course. How do you even sort through that?
Yeah, there's a couple different ways. One, look, deals come to us from advisors, right? From folks that have retained individuals to help them because they're at a point in their career, or maybe for some other reasons like looking for assistance and administrative tasks, etc. So they're looking to sell, right?
Yep.
That's one area. That's not a great area. I mean, those are very competitive deals. There's usually
Yeah, they're looking for an auction. The bankers are hungry.
yeah,
Yeah.
10 or more driving up the price, and not the best, right? So the other ways, we have a referral network. So people that have done deals with us, which is 250 plus now, that are telling their friends and telling people they know that that should be here, that they'd like to work with here. All the great reasons why they joined us and the success that they've had since joining us. So that referral base is the best because folks are here for the right reason. They're referred in, so they're good people that people want to work with here that are already here, and that's really the best avenue for finding deals. So that should represent about 90% of the deals or more that we do. And today, or in the past, it represents probably closer to 60%. So we have some work to do there. So I think that we have some runway to get better, which is always good.
Yeah. Before we jump into the categories, when you look at organic versus inorganic, or build versus buy, as we
Mhm.
like to call it here, where do you see you balancing out? Let's say in the next 18, 12, 24 months or so.
Look, you have to do both. I mean, if you're not growing organically and if you're not making the firms that you acquire better,
Yep.
just playing the multiple arbitrage, I think those days are over. I think they were here. I think a lot of people made a lot of money doing that. But the multiple arbitrage as the only strategy for a company doing what we do is not good, right? So the way that I view the business, and our growth strategy is that, at this point in our evolution, and this will need to change as the numbers get larger, but I'm shooting for 8% EBITDA growth organically, right? So that's, a number that pretty much translates to, 8 to 10% on the top line, but we want to drive 8% EBITDA growth organically. And then with our size today, I still believe we can drive 38% EBITDA growth. I'm sorry, 30% EBITDA growth inorganically. So,
Yeah.
so those two numbers combined, over the course of 2 years, we're still doubling this business every 2 years. And based on the EBITDA size of the business today, which is about 250 million, those numbers are still manageable. Now, as the numbers get larger, that 8 and
Well, sure. Yeah.
30 will have to change. But I think we can do that over the next few years. So we keep trying to scale up both organically by hiring more producers or client advisors, and inorganically by building my origination teams and my integration teams because we integrate our businesses, as we acquire, which is also
Yeah,
something
makes
we
sense.
really need to do. So, So at any rate, there is a tremendous balance and focus on both organic and inorganic. The inorganic makes the news all the time, but the organic is something we work very, very hard at.
Exactly. Yeah. Yeah. Don't get hung up on the press releases. So I love that you set up a growth machine in both cylinders. Probably more than that, and you've got a fresh. You've got people lining up to give you cash. You've got a nice balance sheet. You can move fast, and you see yourself getting a little more aggressive there.
So yes, because we need to in order to keep scaling up the amount of inorganic. So we're flush with cash. We well positioned to carry out our strategy for the next 12 plus months based on our available capital today. And then that's about as long as you want to go when you get a DDTL, right, a delayed draw term loan from lenders. They're only going to keep that available for 12 to 18 months, right? Not indefinitely because it affects their balance sheet. So we have enough capital to run about that long. So we're ready to keep going. So as far as more aggressive, I always like to think we've been as aggressive as we can always be on a year to year basis. So, but we do need to get more done. So I guess that translates into being more aggressive, whether we're seeking more referrals, working harder on the broker deals, all the above to do more. If you want to do more each year, you got to.
And what are you doing on? Having acquired tons of companies myself, there's different ways to integrate the back end, the front end, the culture. And how are you doing on integration? Is that a big deal for you?
It is a huge deal for us. And, I think that the industry's evolved to value that more. We've integrated since the beginning. We just, I just felt right. Maybe that's my CPA background, knowing where everything is, knowing, being able to look in one system and figure out how each business or is
Help
doing,
helps helps have a dashboard. Yeah.
yeah, I mean, let's just let's take a quick look and know how things are going on a day to day basis. So that's something that we've done, and so we've as the team has grown, as the company has grown, the integration team has grown. We have 35 people dedicated exclusively to integrating businesses that we acquire. So in all different aspects, meaning licensing, HR, IT. We consolidate all those administrative tasks, which is something that really helps. One of the things that attracts buyers is not having to do that stuff, right? People,
They hate it. They hate that stuff.
yeah,
Yeah.
they're insurance folks, right? They got in the insurance business,
Let me sell.
clients, and help them with their risk management, and then all of a sudden they look up after a number of years and they're just running an office. They're running IT and HR, and they're not doing what they love to do, which is what got them in the insurance business
Smart.
to begin with.
Yeah, I bet the investors like that too. When you look at your ownership structure, you got investors, employees, execs. What's it look like in terms of the employee involvement?
Yeah, it's tremendous. So we look, we have two private equity investors at this point, right? They're co-investors, Charles Bank,
Right.
who's been with us since 2020, then the Goldman recap, which was the end of 2023. So
So is that like a third and a third type of thing,
just
or
about, just about. So the employees are actually the largest group by a little bit.
nice?
So it's roughly a third, a third, a third to be.
That's the other reason we wanted you on. I heard about that. That's actually awesome. Doesn't often happen on cap tables.
Yeah, I agree, and I think that it is awesome. It creates a great environment. There's a lot of collaboration here. People that join us from other brokers, large and small, when they join us by acquisition, they really emphasize that the collaboration here is something greater than they've ever experienced elsewhere. And I wish I knew how I did that because I could probably write a book. I think it just evolved. Um, but it may very well be because there's 700 plus people here that own some equity, right? So we're all in this together. We're all
Right.
share the same vision and goals. But even the folks that don't own equity seem to get caught up. But I think it's just the culture. And when someone receives help, whether in whatever way that might be, they're more inclined, I think, to help the next person that comes along that or sends an email asking a question that they know the answer to. People jump right in, and it's tremendous.
And you've also done a good job at bringing in some players from the big dogs, as I call them, in your industry, Aon, Willis Towers, probably, and that isn't always the right cultural fit for what you're trying to build. How's that been going, and how do you keep this culture
Yeah,
going?
it has been the right cultural fit because people that join us from
Oh,
those organizations know what they're getting into, right? That's like when you're doing whatever it is,
uh,
40 deals a year. My people in HR or IT or these different folks that need to integrate, they're not going, oh, we got four more deals. I mean, they joined here because we have 4 deals a month or 3 deals a month. And they're like, yeah, we got some great new businesses. We're going to go see some great new people and they just love it. So the people that come from those larger organizations are here because they love the story and they want to be part of something like this. When they join us, no, it's not a surprise. It's not like people don't know what they're getting into when they come here. So the culture's been fine. I mean, we never surprise anyone with what we're doing. It's very open and they want to be part of it.
I like that. It's akin to I've moved a lot of execs, as we call them, from big dog companies out to Silicon Valley, and some of them just want to get out. And sounds like they found a place with you guys. When you look at your lines of business, you're in a lot of personal and business insurance, and you've got all types of business services, this financial services sector seems pretty exciting to me. margins. I
Mhm.
mean, it's got to be changing the whole valuation of the company. And what are you excited about there?
Yeah, that is a really interesting story because, we didn't start this business and say eventually we'll get into the wealth management business, right? But
Yeah, I was actually surprised when I found it there.
but as it evolves, what happens is as you acquire some good size, fully developed retail insurance brokers, as part of their employee benefits offering, they have a 401k business, right? So that 401k business started to grow. And then we had the opportunity to acquire a tremendous 401k platform business called Pension Mark in Santa Barbara, California in May of 2022. So with the
Smart
opportunity to
move.
acquire that, we jumped
Yep.
at it and it was a sought after asset and we were able to get that. So now we're really in the 401k or retirement business in a big way. So once you're in that business, right, then the wealth bridge for folks coming out of their 401k to have wealth management services is a natural. So we decided to build the wealth management on top of the 401k. So that was really an evolution from retail insurance. That includes 401k. I love the 401k business. Money, your inflows of assets are much greater than in the wealth management business because they're coming in every month, right? The employer match the employees. That was a business that was growing at 20% a year organically, right? So that's a great growth business.
Wow.
And then to build a
Nice.
wealth management, wealth bridge on top of that is a natural. So it's been an evolution to fully form the business in that way, and we're really excited about it.
You guys have to work with carriers, and you just mentioned California, where I used to live. I also live in Florida, so two states where, at least from property owners that are listening, and that a lot of carriers have pulled out of. And how are you kind of finding carriers who are willing to take risks? Even renew some risks and some of these. I don't even know what you call them, troubled markets or
It,
avoidance markets. I'll call
yeah,
them that.
they're really tough markets, really tough markets, for the obvious reasons with the wildfires in California and the hurricanes, and the wind issues, throughout Florida on a regular basis. So, we don't, we don't have any markets that no one else has. There's no exclusives here that help us drive that business. But I think
Right.
that look, I think that things, you know, ebb and flow. I think you'll see some legislative changes. I think what's coming out of California now is there's going to be evidence of a lot of people that are underinsured, right? So I think that's going to ultimately drive insurance business in the right direction. You do have to have carriers to write that business, but I think they'll be back. In Florida, you see this, all the time. This being a down market followed by then an inflow of insurers. So where we're at right now with some legislative change in Florida in the last year or two, as far as assignment of risk and I think you're going to see that market come back a little bit. We're well positioned to take advantage of it in both cases, but we want to be in 48 states. And then, so those are states you need to be in from a growth standpoint. I mean, Florida's growing very fast and California's a huge economy and
Massive.
you can't ignore them. So yeah, they're tough. There's no doubt about that.
Yeah, I mean, my insurance broker, was just always put it out to bid, the property, right at the end of the year, whatever cycle you're stuck in. And I said, "Is this all you're sending me? Just this one?" He's like, "This is what I'm using. It's the only one. This is the only one that's gonna insure you."
Yeah.
I was shocked. I was like, "Wow, people are struggling. What is it? Consumers now. Let's dig into that side of your business. What is the thing that they should know about insurance? Just people for their own use."
So look, that's, there's many, many different aspects of insurance, right? You talk about the markets on, commercial lines and the different lines there and what's going on, professional lines, meaning, your cyber and, they're in one market cycle that's a little bit softer versus property, which is remaining hard for all the reasons that we're talking about, right, in California and Florida, to workers
Yep.
comp, which is softer right now. It's been soft just based on how effective and profitable the carriers are in those markets. So it's really the range um, of answers to that question because it's always based on market cycles, which today what drives cycles is capacity, right? It's just the ability for insurers to enter different markets or their desire to enter those markets, and that capacity drives rate. So it's a cyclical business, and it's cyclical not in unison, but different lines are in different cycles at any given time. It's complex. It's complex. The thing you need is a good broker, right? You talk about direct writers and the state farms and the people that advertise all the time. Folks, they go to those places or in a different place. In my opinion, obviously, from where I stand, a disadvantage versus a broker that's really going
because they're captive to one company, one bid. They might feel comfortable with that agent, but
That's right.
it's really the broker, the independent one, that can kind of be a better consultant. Is that the idea?
Yes, that can really shop the insurance to a whole different level and find the best home for you, or the best place for your insurance. I guess home is a bad analogy in this case.
Yeah. So I think you guys have like a $20 million tech budget or something, which, as a percentage of sales, for your industry is pretty good. How is technology impacting your business?
Tremendously, tremendously. I mean, I think, look, insurtech is a buzz term, and I think everybody, not everybody, but it's very hot to want to be in insurtech and what is AI driving and all those kinds of things. But we like to be on the cutting edge of technology in terms of what can we automate, right? What can we automate to help drive efficiency? And we're always trying to automate, and that at one time meant what can you download and not touch in terms of, policies and or revenues and that kind of thing. Now, to the point where we're building bots to actually, execute on some redundant tasks, right? And we're working hard on identifying those tasks that ultimately can be done by bots. So this is, the technology is, has a lot of runway, a lot of runway to be more effective in our business. And we are, you know, really all over it. And with the way that we use data in a data lake and building dashboards on top of that data to run our business on a day-to-day basis is evolving. It's evolving fast, and it's real. To put your head in the sand on it would be, I think, a real disadvantage. I'm not saying anybody is doing that, but you need to be on top of it, or you're going to be left
Yeah.
behind.
Some people are in the insurer space, but I just wrote a Forbes article about it. It's like you got to stay way ahead of it, and you need good people, and
Yeah,
the CEOs need to know more than they ever used to have to. Now you can't just say AI; you have to actually understand what they're telling you, because it's it's real money, it's real investment, it's the future, and it also can lead itself to new products, new services, new ventures, extension. I mean, let's just take one thing: you've rolled up the industry almost here, probably halfway through. But you're going to have a tremendous amount of data, and that is an actionable separate business in terms of that. To me, it makes you extremely valuable. And do you see other different types of offshoots and things that you can build on top of this platform you've set up?
absolutely, absolutely. I mean, look, that data has a ton of value, and we're not leveraging or executing on, monetizing that in any way yet, because we're just moving so fast that we don't have the bandwidth to do that. But what we have
Right.
to do, like anything else, is add the bandwidth to do that because it has tremendous value. We know some of the larger brokers out there are, selling some data or sharing that data in, an autonomous way. But
Leveraging it. Right.
but it has a lot of value. We're not leveraging that yet, but we have enough data where we should be. And it's certainly, um, we have projects as an executive team. We get together, and we are working on 60 plus projects at any time. But we have our top five, and figuring out how to monetize that data is actually one of the top five that came out of our 3 times a year that executive team meets. They met just a couple weeks ago, and that is front of mind right now. One of our top five objectives.
Yeah.
Figure out how to start to monetize that.
Yeah.
Good point.
I've got some, as a tech guy, I've got some ideas for you. And as you look back, you've been on a rocket ship. You can only move so fast, personally, professionally, the team. It's incredible what you've done. What's been your biggest challenge, just personally, in building this?
Um, Yeah, my biggest challenge, let's say the thing that concerns me is the amount of time that I need to spend just building the team because we're growing so fast, right? I want to work more on the
Yeah.
business, and nothing's more important than bringing in the right people. So it does take significant time. But I think about the management team 5 years ago when we did our first private equity investment, or when we got our first private equity investment from Charles Bank. And I look at that management team today and the number of hires and the amount of time that I personally spent on that. It's definitely been, I talk about those insurance guys that, they
Yeah.
get distracted by running a business. Well, I'm an M&A junkie that's gotten distracted by running a business. I love to go out and spend more time on acquisitions and bringing our next great partners in that regard. But building this management team has really been a tall order and something we just got to keep hiring people at the most senior levels to do. But I think we're fully formed on the retail insurance business side. We have some work to do still on our wholesale business and on the wealth management side because they're so new to us. So I think I'll still be primarily an HR guy for some time, and then someday I'll be an M&A guy again.
Yeah, it never ends. As CEOs, we love to play with the M&A, but it's really the people that are obviously are the most important. It's a throwaway term now, but you have to spend the time on it. I mean, you look like the kind of guy that's been in that office on a lot of Saturdays, just guessing.
Yeah, well, unfortunately, yeah, I mean, being in this office, I have another office at home. Let's put it that way, and
Yeah,
and
of
my
course.
wife will come and drag me out at some point. But yeah, it's 24/7. There's always something going on, and I tell folks they can call me anytime, and I mean it, and they do. So it's but I love it. I mean, it's very rewarding. And there's you know 2,800 people here that are rowing in the same direction. So I definitely want to do my part.
Yeah, and doing well too. These are well-paying knowledge type jobs. What's the when you look at the future of the industry next few years and yourself? What's going to happen? I mean, is this all getting rolled up into three? Is it going to be like the airlines where there's three companies and everybody is not so happy?
I don't think so. I really don't. I mean, I just think that insurance, I mean, look, you've had this history, right?
Yeah,
And if you go back, and I don't know the exact numbers, but directionally, if you look at the top, 50 brokers from 20 years ago, and you look at the top 50 now, like a lot of them have consolidated, but there's other ones that come along. When I started in this business, M&A in the insurance space, it was 2000, the year 2000. And you look at that time, you'd hear that there's 40,000 brokers out there, and now you have all this consolidation and all these deals every year. And now you have some of the larger brokers, the top 25, consolidating with each other. And you look down and there's 35,000 brokers out there. It's just like, okay, they just keep recreating and being formed. And I don't think we're going to get down to the top three or anything like that. There just seems to be some folks that want to be entrepreneurial, and teams of people that break off from other organizations. And it's been a long, long time, and there still seems to, persist with a large number of brokers out there. So,
yeah, it is interesting. You're seeing that in the real estate sector too. One of the ones that hasn't been totally disrupted and digitized because people still value that personal relationship, whether they are part of a big group or not. It's like, my guy's Ted, I do everything through him. Um, Still seems to be the foundation, but it seems like you're going to be moving it pretty quickly to more of a digital platform, which should save everybody some money in the long term, hopefully. I bet you have a lot of personal reboot stories. Anything you want to share with us about what you've gone through?
well, I'd like to say that this was the first business that I started, and it's been uber successful. But I've been you know, I've always had an appetite for entrepreneurial endeavors. Again, my days in public accounting and looking at people that seemed to be most successful and happy were certainly working for themselves. And so there was some smaller ventures when I was, younger. My wife laughs at me. She says, "Remember, you know, this business or that business. But I will say that this has been an interesting lesson, because that whole idea of being an entrepreneur and being in business for yourself. And then once you do that, once I did, partner with a private equity group, I mean, the amount of help and the way that we've grown, everyone's wealth that's invested in this business is a real lesson that you don't necessarily have to be in business only for yourself to be most successful. That with the right partners, it can make a lot of sense. And so I think the reboot, really was, we never sold out. Like, we partnered, and that's still the case today. And I think that's going to be the case for this business and perpetuation. So it was a bit of a reset to say, okay, now I got a boss again, and now I actually have two, just a couple years later. And
they're big. They're big ones too.
Yeah, yeah. It's interesting. You do this to get business for yourself, and then when you get that partner, you're like, hey, I should always have a partner. And I've seen folks do this and have partners, private equity backing from the beginning. I don't know if that would have been the best answer, but anyway, it's been a bit of a reset to refocus and go in the boardroom instead of just sitting around a table on a Saturday morning with a couple partners and be like, okay, what are we going to do? And we decide in 5 minutes. It's a little different, but
very different. Great. Thanks, Rich. Appreciate you joining us. Great reboot story, by the way.
Thank you. Appreciate it.
You've been listening to Rich Eknoian. This is Dean Tobias with the Reboot Chronicles. Listen or subscribe wherever you get your podcasts or at rebootchronicles.com.